Hey everybody, it's Chuck Barone. Tuesday, November the 7th, 2023, and another wild one on Wall Street, man. I gotta say, guys, I've seen some wild stuff. I've been watching these markets since dinosaurs roamed the earth. And I gotta say, this is the weirdest, freakiest, craziest, most uncertain time I think I've ever seen, and I can remember at least. Wild swings up and down. Anyway, before I get rambling, let me take a second to welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys watching these videos, hitting us up with your comments and questions. You guys keep us going here every day, man. We appreciate you guys. All right, so let's talk about these markets today. So markets today kind of feeling like now they're buying into this cycle of rate hikes is over. So the market kind of adjusting to that now. The stock market rallying like crazy. The Dow Jones up 56 points today, back now well above 34,000 at 34,152. The Nasdaq up 121 points, 13,639. The S&P up 12 points, 4,178. So the market's continuing to rally all the way across the board. Everybody doing well. Earnings coming in pretty good. Now that they feel like the fear of more rate hikes is gone, you're probably going to see these markets rally pretty good. Bond market rallies today too. So bond yields falling. The 10-year falls 9 basis points down to 4.57. The 2-year down as well, but just down 2 basis points, sitting at 4.91%. So the bond market just it's schizophrenic, man. It doesn't know which way it wants to go right now. But I guess we're going to have to see, because the Fed yo-yos were certainly out in force today talking tough. Bond market shrugging that off pretty easily. The dollar today up very small, which is weird with the bond market rallying, but okay. Sitting at 105.52 on the index, good solid number. It had been riding above 106 for a while, so now down a little, but still holding strong. Metals today down, not a good day. Gold and silver, gold falling $9.30, $1,968.20 for an ounce of gold. Silver falls 39 cents, sitting at $22.61 for an ounce of silver. So it's just, the prices are hanging in there. These declines are pretty small, but down now pretty much, we're looking at 10% decline for silver. So I guess that makes it correction territory, or pretty close to. And, gold not down as much percentage-wise, but down, from its high around 2,000. Oil today, whoa, boom, down. I've been telling you guys that oil seems to be most comfortable trading between 70 and 75. We've had all this stuff with the war and the Saudis and everything else, so oil had spiked back up pretty good. Today coming down pretty strongly, down $3.68 per barrel. West Texas Intermediate now sitting at $77.14 for a barrel. I think ultimately, like I've been saying, 70 and 75, somewhere in between there. It's probably going to settle and hold there for a little while before it continues another decline down. Bitcoin today rallies up $589, sitting at $35,616. Well, I think it's all optimism with BlackRock, the ETF. There's several actually proposed. I don't know how happy the SEC is about some of this stuff, but I got a feeling it's going to happen. And when it does, you're going to see Bitcoin blast off. All right, news you need today. So markets now buying into the idea that this cycle of rate hikes is over. The market's now pricing in a 90% probability that there will be no rate hike at the last FOMC meeting of the year. The Fed will hold rates steady again. Today, you got the march of the mediocrities, these blowhards from the Fed out there. You had Neil Cash and Carey, Waller, Bowman, all talking tough on inflation, like they're going to do something about it. Sorry, guys. The jig is up, man. You guys had your chances to raise rates for 2 cycles in a row. when you saw the inflation numbers were moving against you. Didn't do it. Now you're going to talk tough? Man. Well, I got to say, it looks like this cycle may very well be over. As I said, Wall Street, 90% chance that there will be no more hikes. Now I got to say, though, how long do you think it takes before the Fed has to either reverse, it's a reverse pivot like Australia did today? Okay, Australia. Looked like they were done with their cycle. They held rates steady for 4 consecutive meetings. The market's believing the rate hike cycle was over. Oops. Just raised rates again there. The reason? Persistent inflation. So what's going to happen here in the U.S. now? It's kind of laid out. You can get a pretty good view of it. So if this is indeed the end of the cycle, okay, one of two things could happen for the Fed here. Either A, it turns out to be this perfect soft landing that they've been talking about that I don't believe exists. B, we get a recession, which the Fed must know is coming. They get a lot more data than we do, probably more accurate data. So you're going to either have the Fed sticks the perfect landing, or we'll have a recession, which will tamp down inflation pretty strongly because it'll probably be a short but strong recession. Or the Fed does what Australia just did. Reverse pivot back to rate hikes. It's going to be fun to watch this stuff, guys. Especially if you're sitting like we've been advising. You're looking pretty good right now. Some of this stuff we can kind of take a little bit less serious of a view of it than some people who are stuck in these markets. But crazy times, man. All right, interesting stuff before we get wrapping up today. I was reading this article. They said that in the history of the United States, we have had 5 periods in the history of the country, 5 times, we've had meaningful deflation. Meaningful, I shouldn't say deflation, meaningful reduction in M2, meaningful reduction in the money supply. Okay, so 3 times between around 1873 and 1890, 98, I think it was. 3 times, meaningful drop in money supply, boom. Big deflationary spirals, market panics, not fun times. The 4th time, we had a meaningful reduction in M2, 1931 to 1933. I don't think I need to go into a lot of detail about that era. The Great Depression, okay, we all know what that's about. Well, guess what, guys? Right now, we are right now in the middle of the 5th time in history of the United States that M2 has now declined about 2.5%. A meaningful decline they call 2% or more. Well, and probably this QT does not sound like the Fed is finished pulling money out of circulation yet. So it looks like they're going to continue to draw down on M2. So what do you think, guys? Is this going to be a deflationary event like the previous 4 times have been? You might think it would lead to that, less money in circulation. It's just hard to think of deflation right now when we're in the middle of fighting an inflation. But that's a pretty serious warning, one we're going to start keeping a look at, just in case things start getting a little bit hairy. We want to be in front of that. That would be pretty good news for some assets, really bad news for others. We'll get on top of that. And finally, a couple of tidbits about real estate. I was reading of this homeowner in Florida. Florida's been having some difficulty with their homeowners insurance. They've been ravaged by hurricanes, it seems like every year now. So homeowners insurance companies trying to bail on the state. The insurance commissioner in Florida not letting that happen. What they want to do is just sell car insurance and stops insuring houses. That's not possible. But listen to this. I was reading the story of this guy. He lives in West Palm Beach, Florida. So that's like real close to Palm Beach Island, where Trump lives with Mar-a-Lago and a lot of very, very wealthy people. West Palm is a nice area, affluent area, but nothing like regular Palm. But this guy lives in a $3 million house, a very nice home, and he just got his homeowner's insurance bill. Guys, you want to know what they're charging this guy for homeowner's insurance this year? Now, granted, it's a pretty nice house, $3 million house. His homeowner's insurance bill came in at $121,000 for the year. For the year! $10,000 a month for homeowner's insurance. Really? Now, I don't know how rich you got to be to not care about an insurance bill like that. Okay? But that is some crazy crap of it. Could you imagine? You feel like, okay, man, I got it made. I'm living down here in Palm Beach. It's really nice. The weather's beautiful. I got a home on the water. It's a $3 million place. And now you get an insurance bill like that? That could spoil your whole day. At least it would for me, right? And I wanted to talk a little bit again about those numbers I talked about during yesterday's show. When I was talking about house affordability, the affordability of buying a house right now, it's absolutely impossible. And getting worse. Now we're actually seeing the mainstream media all over this. But the statistics that I gave yesterday were some shocking ones of what it's going to take, what's going to have to happen for housing prices, payments, to be affordable for the middle class. Okay, listen to this again in case you missed this yesterday. Either rates have to decline 4.4%, or incomes for average workers will have to rise 62%, or home prices will have to fall 38%. Are you hearing these numbers? Rates will have to fall 4.4%. Now, mortgage rates right now about 8. So they're talking about bringing rates all the way down from 8 back down to 3.5 roughly. How likely is that? I'm guessing not very. Incomes for the middle class would have to rise 62%. Really? How likely is that? I would say 0% probability. Households are going to go from around $70,000 a year income to about $115,000. 0% chance of that happening. Or house prices have to fall 38%, almost 40%. So imagine that. Your $400,000 house is now worth $260,000. Guys, this is some dire stuff for residential real estate. I don't know the solution to this. I guess it's going to be a combination of all of this stuff. But I have no idea how they get to these kind of numbers, because they are colossal. Anyway, that's it for the day, guys. We appreciate your support. We will be back tomorrow. We'll start getting some data. I was looking for consumer credit data today. Have not seen that come across yet. So we'll talk about that tomorrow and all the other data we're expecting. As always, guys, if you can, hit the like button. It changes the algorithms, helps get our video in front of a few more people. We would appreciate that. As always, hit me with your comments, your questions. We'll be back tomorrow to bring you the news you need. Until then, guys, take care. Thanks.